What's up, everyone? Welcome to the Market Primer for, I'm doing this on Saturday, but we're going to say Monday, August 8th, 2022. The markets have seen a really nice run. The Nasdaq's 20% up off the lows. We are coming into some huge levels where if you wanted to make the case for a short biased bet, we are getting close to the point where a lot of folks who were entirely early to the short trade are now getting stopped out, and into those stops you can start looking for some moves. So we're going to hop over to our charts and we're going to look at some levels. We're using our volume roadmap. Remember that. Also remember these lovely orange glasses. I don't know if you can see this. We'll go in really quick. I've got this lovely hole because my dog decided to get a hold of them in the backyard, but I'm too cheap to get a new set of screen glasses. So let's dive into it. We're going to start off with the S&P 500. Strong move, right? Dips are being bought. Risk on sectors are starting to move. The push in HKD, which is a low float stock, where it went up to $2,500, kind of blew out low float land. So we're seeing some silly movements in low float land and just some risk appetite measures that are running hot right now. We are into some resistance levels, and I feel that the resistance levels are just a little too obvious right now. Okay, so to the upside, let me make sure I got my notes right here. 414, 416. It was basically the high of the week. That level corresponds with this level right here and this level right here. Let me go ahead and throw on volume profile so you can see this a little bit better. There's also a key HVN, and this is hard to see, and I'm going to show you a cool little trick you can do inside of TradingView. If you really want to do this, you get the entire trade volume history for the range, so when you zoom in, it doesn't adapt to it. So there's a couple things that you have to remember. This is a local HVN, so this is acting as a magnet. Above that, we have a really interesting level. So a lot of people are shorting against this. And it's a fine idea, I think, to trade that at least on a shorter term basis. But if you think about it, where are they going to run their stops, right? If you're short this, where are you going to put your stop? You're going to put your stop against this high right here, right? That's just a very obvious level. Just above that, we have this LVN that is coming into play, and that's going to be right at 419. So 418.81 to 419. I think that that's a better level and a higher quality level for a good short biased kind of trade. If we get enough time, the swing A VWAP from year to date, so the beginning of the year, and this says pink line right here, is going to start dropping and catching up with that price. So I think that that's going to be a level you have to consider. One more to the upside, we have a big LVN coming into play right here at 425, 428. That is also internal pivot levels from here, as well as here and here and here. So if this short doesn't work, and if we just go straight shot up into that level, then I think that's worth a look. Being much more aggressive with taking your profits, taking risk off the table, considering rebalancing, maybe looking at some hedges. If you want to be speculative, you look at some shorts into that level. To the downside, we do have 403, 405 right here, and that's the first pullback level. That's a nice to hold, especially for bulls. You know, if we see some kind of a push underneath the week's range, run those stops. We come back and we retest the March swing A VWAP, but this time from the other side. And this has just been a monster level from a volume perspective as well. There's just a huge volume shelf right there, which means if that level doesn't hold, not enough people have facilitated trade at this, and you can probably expect a swift whoosh to the downside down to about 398, 399. I'd like to round up on that just a little bit, because there's some other levels to keep in mind. So if you zoom in on these, all right, so 388, 389, we've got just double check. We got that the other side of the volume shelf, which we're not seeing right now. We've got the swing A VWAP from the most recent pivot lows coming into play, as well as the 20 and 50 and prior resistance potential support. So this whole area is something you need to look out for. So My contention right now is that if we pull down into 403 and change, if that doesn't hold, you're going to expect a swift push to the downside, which means if you're looking at hedges, targeting that 397 to 400 level as your first profit target is probably going to be a decent idea, and honestly a pretty good spot to start looking at adding on short-term dips. That's just going to be a function of your exposure and your time frame. Below that, we've got this 391 level that I've got it highlighted in blue because it's still a suspect level for me. We have seen price interactions with it in the past. There's a volume shelf coming into play right there. I'm sorry, there's a high volume node where it could start acting as a magnet, but you also have the swing AVWAP from the June lows coming into play as we catch up into that. Next up is the NASDAQ 100, and the structure is going to be very similar where we've got, some pretty clean levels to work with. Just above the week's high, where you can start to expect potentially harder reversals into that. So to the upside, we've got 326 to 328. That's going to see an area where we've seen some price interactions in the past. That is, we'll put this back on. You're going to get a nice low volume node coming into play just above that. And we also have the... Let me make sure I'm getting this right. 326, 328. We have the swing anchored volume weighted average price from year to date coming into play just above that. So if the S&P and the NASDAQ both come into that level at the same point in time, that's probably a good indicator that maybe you take some risk off the table. Just above that, we do have something that I'm calling an orphan LVN. And this is a low volume node that's pretty significant, over the past few months of trade. There's just not a lot. There's not a lot else there right now in terms of prior price interactions and things like that. We could get an instance where we run into this and then we see a stop run into that, and that's going to be the swing AVWAP from all-time highs if it continues to head down and we collect into that. Above that, we've got 335, 338, which is going to be the big volume low volume node, as well as the volume shelf that goes back, worth of full years of trade. We've seen interactions here and here and here and here as well into that level. To the downside, we've got 312, 315. That's the, it'd be nice to hold for a bullish setup. We've seen, if you reference the June range, the S&P's coming into it towards the high end of the range. The NASDAQ's already broken back above it, so the structure's slightly different. We also have a potential pullback into that prior resistance range right around that 312 level on the low end. If we go sideways for a little bit and then pull back into it, then we're going to have the 20 EMA catching up, as well as the swing AVWAP from the July lows. The next spot is going to be 312, 315, and I know that is, that's the one I just said. Very, very wide range on that. So it's a little bit loose for me right there. Underneath that, we've got 304, 305. That's the June range lows. And if we get there quickly, then we've got the swing AVWAP from the July lows. If we get there slowly, then the swing AVWAP from the June lows could start to come back up and catch up with that price. Underneath that, 297, 299 as, we got 304, 305, just talked about that. Then 297, 299. And that would be if we fully retrace the past 8 days, we've had 8 days in a row right here? Yeah, 8 days in a row where we have closed higher than we have opened. And if we retrace that entire move, then we can kind of negate the recovery theory in the short term. And that's probably going to be a function of, some Fed voodoo. But we're not expecting Fed voodoo in the next 30 days. So that's just kind of a tough call to make. I'm not expecting straight downside crash action. Obviously things can change, but it is what it is right now. Next up is the Russell 2000 index. We put in a bullish engulfing on Friday. And what that means is we gapped underneath Thursday's low, and then we just ripped well above Thursday's high. And this, you're like, oh, the economy sucks. Why is the market rallying so much? It's a function of positioning right now. There's a lot of funds that are just completely off sides right now. A lot of folks playing catch up. And so it's not a shock to see that kind of move. That being said, 190 to about 191, 192 is going to be a huge level. And we're right there, right? We've seen this act as resistance in the past. It was also prior support. We also have the swing VWAP from, where is this? Yep, that's the March high. That's going to start coming into play, as well as a low volume node. So that's just a monster level. And if you back this sucker out, let's take this off. If you back this out, you know, we can view this as a very long-term structure up here, right? 9 months of sideways action. We break down underneath it, and then we have a new range that gets knocked out for about 4 months. Now we're testing the top end of that range. I think if we switch to the Russell Cash, we should be able to see this a little bit better. All right, so look at this. Here's range 1. Here's range 2. We're back at the upside of range 2, and last time we were there, we completely fell out of bed. The issue is, you know, positioning, and we don't have Fed voodoo for another month, so it's just, you know, could we see a little bit more of a squeeze? And I think it's very possible, which is why we want to start looking at some upper edges as well. So we've got this 194 quarter, 195 half, and this is just a best guess for me. This also coincides with a longer term volume shelf, at least the first part of it. So that's going to be the first area that I'm looking at. And then we've got 197 half back up here. And I know, like, within this range, it's just kind of in the middle and not a whole lot. But if you look at the shape of the volume that's traded, that is the lower end right here. So if we start rallying into that, and, you know, if there were people who bought in this range saying, oh God, get me back out at break even, they're going to start selling, and that's going to create some resistance. Okay. If we get there quickly, that's going to coincide with all-time highs against this swing VWAP, which is highlighted in blue. To the downside, we've got 183 half. And this is, again, I haven't had a good feel on the Russell, just because, you know, if you look at this chart, most of the volume that was traded was back up here. And for those of you that have been watching for the past few months, I basically said we didn't really have a whole lot of data from the November rally right here, not a lot of volume data. And so all of this has been back and fill and just a hot mess, in my opinion. I think that the S&P has had a little bit more of a cleaner structure. But to the downside, we've got, what is that, 185 half. That's my best guess for first pull, maybe a little bit underneath that. You probably want to guide based off of the S&P and the NASDAQ moves, and then you can start looking at a shot for the Russell. Next up after that is 182 3/4, so 182.77. And that, let me make sure I got this right. Right around here, it's going to be the swing VWAP from the July lows, volume shelf, internal pivot level, as well as the swing VWAP from the April highs coming back to retest that level. Okay. And I think that the 50 EMA is kind of right around that area as well. Okay. So there's a lot going on right there. Again, if we were to retrace the past 8 trading days of price action into that level, that's probably not a very bullish sign, right? So if you want to be bullish, you want to see either range or some kind of a shallower pullback that continues to get bid up aggressively, which is kind of what we saw on Friday on a very short-term basis. If we were to see further selling, 179, 180 is a huge level for me. It has acted well with the structure of the market over, you know, from the May trading ranges. And let's see, 179. We've got internal pivots. We've got an LVN. It's a huge volume shelf. We got the 50 EMA right there. If we get enough time, you know, maybe we chop around and then we get some bad Fed news or whatever, you know, some sort of bad news that comes out. The swing VWAP will come back and catch up with that price level. Okay, so that's like an extreme bearish, oversold bounce kind of play, especially if we got there quickly. But I'm just kind of expecting a little bit more range and digestion. If we see one more push or maybe 2 more pushes, those are going to be great short setups, I think. Next up is a VIX. The VIX is trading around 22, 23. Let's go ahead and pull up VIX Central. And this is why it's really difficult to make the case for a complete crash right now. We've got spot trading at 23. The lows for 2022 is right around the 20s. That tends to be the lower end of this range. But if you look at the structure of the vol markets, we've got spot trading at a discount to the futures. And the futures are in what we would call contango, which tends to be a bullish alignment for the markets. So we could get some scenario where if the markets go sideways and we see volatility compression and we see range compression, it's going to be exceptionally difficult for traders to keep a bid on the VIX above 20, mid 20s. And so we might just see a continued depression in volatility prices, which would keep a bid on the overall markets. Okay. We can also take a look at VIVIX. And this is really interesting because this started showing us signs of non-confirmation. Basically, while the market was getting absolutely truck-sticked in June, the VIVIX, which is the demand for VIX options, wasn't there. We weren't seeing spikes to 145 anymore. Now we're back at the lower end of this range. What that tells me is that, if you do need hedges, you might want to consider VIX call spreads. Maybe tie it to some VIX puts, and you have a nice little long vol position, or at least long vol of vol. I know that's kind of advanced, but that's worth a look. Just don't try and go full size. You're probably going to be early on any kind of fade in the volatility markets because vol tends to bottom differently. You see VIX spikes and then a collapse. You see a VIX sell-off and then it trades in a range for like 1 month, 2 months, potentially 3 months. And during that time, if you're buying hedges, you're getting smoked on that. So you just got to make sure you're being smart with that. That's all I've got into this week. If you are looking for my trade setups and how I'm going to play this to the short side, you can become a member at Precision Volume Alerts. I believe in the link in the description in the YouTube video, there is a link to watch our training webinar so you can get trained up first and you can see what we're talking about with our volume roadmap and how to trade it, as well as how to get my alerts for that as well. Thanks so much for watching. I'll see you guys next week. Take care.